All right, a very good evening to you. Thank you so much for joining us right here. This is Power Talk Show. My good name is Brian Sakwa. You can interact with us on our socials to Y254 channel. In just a bit, we'll be loading a question of this segment. We want your thoughts and feedback on it. My good name is Brian Sakwa. Now, in this topic right here today, we're delving into matters insurance, breaking down policies, real-life stories that affect your wallet and protection. What is that one mandatory insurance cover that you need to have as a young person? And of course, when it comes to matters wealth, how does it relate to it, to a place that, you know what, when you get older, you don't have to regret. You know, we are all about the here and now lifestyle. That and much more is what we are delving into with my guests who are live with me in studio. I'll be speaking to Antony Kihara. He's an insurance consultant, alongside Nancy Kiende. She's an inheritance planning consultant / financial advisor. Great to have you again, Nancy, and great to meet you for the first time, Antony. Maybe we can start off, let me start off with Antony. What is that, I think I had mentioned it earlier, is there a mandatory insurance cover, I don't know if you can call it a cover or a policy, that an average Kenyan should have? Because when you look at the here and now lifestyle that the youth are into, also specifically the Gen Zs, it's all about the YOLO lifestyle, man. But while all of those things are happening, life is lifing. An accident could occur, you could lose your mobile cell phone, and I understand you could even insure your wallet. It goes as far as even your TV set in your house. Are there any mandatory insurance covers that an average Kenyan should have right now?
Well, thank you so much for this opportunity. And when you talk about mandatory insurance, I would want to bring forth about insurance that one is government regulated. If you come to issues like motor insurance, that one is compulsory insurance. But when we come to other insurances like us young people should have, we have insurance just a free will. We don't have a mandatory insurance. But if I would be asked as a financial advisor, I would say we need every insurance that is out there. Mm-hmm. Yes.
Are there like categories of it?
Yes, we have categories of it. We have a personal insurance, that is insurance that involves you as a person, as Brian. And then we have the one for your business. Then we have one for your farm, let's say for your crops. It's a whole wide range of types of insurances.
Right, absolutely.
Yes.
Let me get to you, Nancy. Sure. When it comes to the financial aspect and how the decisions that we make right now as young people affect our future, how does insurance come in, especially in your forte, and what you help or aid young people to understand about, you know, their latter days?
Yeah, thank you so much, Brian, for having me a second time. It's such a pleasure today to be able to speak about my specialization, because this is something I'm really passionate about, and I'm more than happy to share insights that will help us as young people and even as we advance in age. So yes, first of all, there is different insurance classes, and there is tools that, you know, young people can use to ensure that they're leveraging insurance for number one, protection, for number two, wealth building. Yeah. And when we talk about protection, we're looking at not just you, but we're looking at also your dependents. When we talk about dependents, these are people who depend on your income and would suffer if your income stopped today. Yeah. So we are talking about your family members, your children, your spouse, your parents, your siblings, anyone who depends on your income. That is now where protection comes in. You look at yourself, how can I protect myself? Is it protecting myself against something like a critical illness, something like a permanent disability? We're talking about protecting your income, or even death. And we're talking about death because death is guaranteed, right? Let's remove that, first of all, question of, am I paying because I'm anticipating? You're not expecting to die tomorrow, but because it's guaranteed, you plan in advance. So there are those tools for protection. Now, when it comes to wealth building, there is also ways to build wealth for your beneficiaries or your dependents while you're still alive and while you're still young. So we're gonna talk about all that.
Let me get back to you, Antony. For an average Gen Z who is living their normal day-to-day life right now, what would you advise them to go for in terms of the most pertinent, like most important aspects of their life in terms of getting an insurance cover? Like I said in the beginning, life is life, anything could happen. So what would you advise as a consultant if you were to tell a Kenyan youth in terms of consuming insurance?
If I was to advise a young person, because as you have said, life is lifing, and we are exposed to a lot of things. And as my friend Nancy has said, that anything can happen to any of us. So the first insurance that I advise young people to have is a personal accident cover. That is, in case one, you have there is an accident, and number two, in case anything, you know, an accident can happen anytime. That is one insurance that I would want any Gen Z to have. And
personal accident
yes,
cover.
personal accident cover.
Right.
Yes.
That goes from like an individual.
Yes,
or
individual.
it could cover like if your dad took it or your mom.
Yeah,
or family.
you know, it's an individual cover whereby
Right.
you as a person, you can also bring your parents and your siblings, also all your family too.
Yeah.
But it's one-off cover. Right. That's for you only. But also, if you want to bring someone else, then they can have it as a standalone cover.
Yeah.
Yes.
What about the one where family takes and you can maybe benefit on it in the future without maybe you contributing? Because there's somebody who was telling me, yes, it's possible for you to enjoy family. Is it life assurance?
Yes.
Yeah. And you can use it even in your latter days, even though you didn't contribute, it came from your dad's wealth.
Oh, okay. Right.
Please explain how that works too.
Okay. That one, I think my...
Yes.
Oh, yeah. Oh,
Let me take that.
Please.
Yeah, I'll take that because that is my specialization.
Right.
And I want to give you a quick example so that people can understand, you know, when we talk about paying a little today while you're alive so that your beneficiaries can be paid a lot of money or a very good inheritance when you're gone. This is how whole life insurance works, yeah?
Right.
I do understand that it's still a very new kind of concept in Kenya where people really confuse it with endowment plans or savings plans where, you know, you tell someone, let me show you how to use whole life insurance to create wealth for your family. They tell you, no, I have so many policies with, I don't know, X and X company, but they don't understand that this is a completely different plan that works differently.
Yeah.
So a whole life insurance cover works like this. You buy a cover today and you pay very little premiums according to your budget over a period of time. A long time ago, you would pay for life or up to the age of like 99.
Yeah.
But nowadays we have companies offering a payment term as short as 10 years, 15 years, 20 years, where if you choose to pay for 10 years, when you're done with the 10 years, the burden of paying the premium is taken away and that cover is permanent and that money stays there until when you transition, because transitioning, we said it's given, it's guaranteed, and the people who depend on you will be paid this money upon your exiting. So this is a good example I'll give here quickly.
Yeah,
let's say you, Brian, you're like 25 years. You want to plan early and build an inheritance using a whole life cover. If you want to, let's work with 10 million shillings. You want to make sure that the day you transition, your family will receive 10 million. And I'm talking if you start the policy today and transition tomorrow, your family will be paid that money because it's assured.
Yeah.
Guess how much you will pay if you're taking a 15-year payment plan if you're 25.
Yeah.
You will only pay 4,801 shillings per
That's
month.
Per month, okay.
For 15 years only. And your family is assured 10 million shillings from tomorrow. Okay? Now, let's look at someone who's 55 years, trying to lock the same amount for the family. And this is where the age comes in.
Right.
If someone is 55 years and they want to lock the same 10 million that you have locked paying just 4,801 shillings as a 25-year-old,
right,
the 55-year-old will pay 18,508 shillings per month for the next 15 years. To lock the same amount, you will lock with less than 5K a month,
right,
because you're younger, because you're way younger.
Right.
So that is where also the question of starting early and starting young comes in.
Right.
That is how a life insurance cover works.
Yeah. For that kind of insurance, who are you in whose insurance in what insurance category are you consuming, or policy are you taking?
Yeah. Okay, to answer your question, let's go back to the question of the different types of insurance.
Yes.
The two major categories are general insurance and life assurance.
Right.
General insurance is anything that you have to renew. Think about your car, you have to renew yearly. Travel insurance, work injury benefits. Think about medical insurance. Anything that you have to renew every year, that is general insurance.
Right.
Now, life assurance is what now I'm talking about, which is long-term and it's a plan. You don't have to renew every year, but you pay premiums to keep your cover on.
Yeah.
Yeah, that's the difference between life assurance,
And general.
its plans,
Right.
versus GI, general insurance.
Yeah, so basically when you walk into, maybe I'd also like to pick your thoughts on it. So if I'm walking into an insurance company to start taking the policies or getting the different entities of it, maybe what is the conversation I'm supposed to have with is it the policy seller? Yeah.
Okay, now I'm going to assume that you, Brian, want an insurance product, right? So one, I would want to understand what is your need, right? Because as I've said, the insurance part is a very vast topic. If we start talking about it right now, we are going to take up to actually like a week before we finish talking about insurance. So the first thing I ask you is, what do you want? Do you want a medical cover? Do you want to protect yourself or your family? Do you want to protect your business? Do you want to protect yourself? Do you want to protect your crops? I need to understand what type of insurance that you need. Then from there, I ask you, do you have a budget of what you want? You tell me, I was thinking of spending, let's say, I'm going to give an example of medical insurance.
Yeah.
You are going to tell me that I have a budget of like 100,000. So I'm going to try and formulate a quote for you that is going to match your budget. It can be either higher, slightly higher, or slightly lower to match your budget. So the first thing is to understand the type of insurance, and the next is to understand the budget that you have. And then, where do you want to use it? Because how long do you want to have it? Let's say it's a car. We have two types. You have third-party insurance, and then you have comprehensive. So I need to understand and also to educate more on the best cover that you need.
Yeah.
Yes.
So that means you'll have to take me through some of the policies and the
Yes,
regulations
yes.
that I
Actually, we
need
call
to
them
adhere
products.
to.
Now it becomes a policy
Right.
after you purchase it.
bought
But
it, yeah.
yes, that's
Absolutely.
how. Yeah.
Absolutely. We are asking you on our socials, would you rather save your money or pay for insurance, and why? And also I like my guests to react to it. That's the question of the day on our socials using the hashtag Power Talk Show. Would you rather save your money or pay for insurance? And also why? Please let us know your thoughts and feedback on that question using the hashtag Power Talk TV Show. Still on you, Antony, for a Gen Z, Gen Z or the youth literally at large, they're all about content creation.
Yes, yes.
In the life ecosystem right now, like let's imagine a Gen Z who's all about content creation. They have their gadgets, etc. They're all about matters technology. Is there an insurance cover that you'd recommend that could aid them, secure their future and also their activities on a day-to-day?
Thank you very much for that question. Actually, I'm a believer, and I read the Bible once in a while, and there is a verse that says, "My people perish because of lack of knowledge." And thank you for this platform, because at least we are going to educate each other as Gen Zs and also as young people, because I think that most of the I'll start by saying that insurance penetration in Kenya right now is around 3%. So just imagine the consumption of insurance. So when it comes to people understanding that we can insure the most valuable things that you have. If you believe that your suit is the most valuable thing that you have, then me as an insurance agent, I'm going to take you through on how you're going to insure your suit. That's bring us to one product that is called domestic package, whereby you can insure anything that we start with your phone. You can insure your phone, but you can insure your phone. You can insure your, let's say, because we are too much into content creation, so we have cameras, we have microphones, we have lights. That one is going to be in that part of category of domestic package. Then we have your things, your items in the house. Right. If you have a TV, you have sofas, you have utensils, you have refrigerators. That one is also going to be insurable. It's an insurable product. If you have a golden earring or a silver chain, that one is something also that we can insure for you, Gen Z. So I want to tell the Gen Zs out here that everything that you have and you think and you believe it has value, then it's insurable.
Right.
Yes, yes.
I'm actually seeing right here, it says despite a rapidly growing population of over 50 million Kenyans, insurance penetration in Kenya remains at 3%. The law uptake has long been blamed on limited awareness, complex application claims processes, high costs relative to income, and above all. So also your level of income can determine the kind of insurance cover you're going for. Right?
Because I'm going to give a small example.
Right.
If you are able to purchase a phone worth 20,000,
right,
then you see then the value, the insurable value there is going to be 20,000, as compared to a person who has a phone of around 300,000. Then you see the insurable value is going to be 300,000. So it means the more you have, then the higher your premiums are going to be when you are trying to insure what you have.
Yeah. So must you have an income before you get an insurance?
No,
cover?
you don't have to have an income. You just have to have an insurable interest. That is, what do you want us to cover?
Right.
Because for insurance, for insurance to exist or for policy to exist, then you have to pay something, because that is the exchange that we give to the insurance companies, so that now we can have the protection in place.
Okay.
Yes.
Nancy, to you, is it possible if you're I don't want to give a salary category. Let's say you've given a good example of you're 25, you're in your early 20s, but you're looking forward to secure maybe a future, rather to secure wealth that could help even your grandkids. So is it possible as a young person, is it possible as a young person to start with let's 50 bob? And then after it accumulates, maybe in that kitty that you're saving through,
yes,
you get an insurance again that can, insurance cover that can secure the savings.
Yes.
Is it logical?
It's very logical. And the reason is the cheapest whole life insurance cover that you will get in the market will cost you as low as 3,000 shillings. So if you are saving that amount on a daily basis, it's definitely possible, right? What is 100 shillings times 30? That's 3,000 shillings. So if you are saving 100 bob per day, you're able to secure, a policy that you will pay for 3,000 shillings as premium per month. And if you're starting from as young as 25, I can blow your mind right now if I tell you how much you would create with a policy worth 3,000 shillings a month, starting from, I'm giving an example of a 25-year-old. Yes, so it's possible.
Right.
And the other good thing maybe I can add on the life assurance part is that there's no limit as to how many whole life covers you can have.
Right.
You can have 10 if you want. You can start today with what you have, add another one next year, add another one in 3 years. You can have as many as possible, and you can build up to 500 million Kenya shillings as sum assured for your family. You can build up to 500 million.
Yes. When you look at the lifestyle of Gen Zs and how they operate in the virtual space too as well, most of them invest in areas like the money market funds, in crypto. How do you incorporate insurance into such a space so that they're secure and protected? Okay,
that's a good question. So when it comes to life assurance and how they can protect what they are building, very important. I was actually just meeting a client of mine who is looking at protecting his wealth. And this is the angle that I'd like to educate our audience on today. When you've done all these different investments and you've not added a layer of protection, which is life assurance, if you transition tomorrow, everything you've been building, you know how it goes. If you leave it, people that you are providing for are forced to liquidate the assets, sell property. Some of them even have to sell them under market value so they can continue maintaining their lifestyle. So when it comes to life assurance and building wealth for your dependents, you add it as a layer of protection on the investments that you have to make sure that when you transition, everything you've been building is not liquidated so your family can continue living their lifestyle. And this is how the wealthy multiply their wealth. I want to give a quick example that our viewers can check. Families that, like the Rockefeller Foundation, the Rockefeller family, not the foundation, sorry. This is how they multiply their wealth. If I'm paying 5,000 shillings today to make sure that my daughter gets a cash inheritance of 20 million tomorrow, Do you see what I'm doing?
Right.
All the investments I'll have invested and the wealth I'll have built for her. When I'm gone, she doesn't have to touch that.
Yeah.
She will receive this 20 million and I'll have taught her how to reinvest it to continue multiplying.
Right.
And she will teach her daughter and her son as well. And this is how we will make sure that we've completely cut that generation of financial struggle
Right.
in the family in that sense.
Absolutely.
Yeah.
And thank you so much for that point. And we're still asking you rather, would you save your own money or pay for insurance, and why? We want your thoughts and your feedback on our socials using the hashtag Talk TV show. Would you rather save your money or pay for insurance, and why? Let me come on to you, Antony. What is likely to happen to a person who doesn't go for any insurance? You're just living randomly. I'm picturing people in Ushago, they have no idea. Most of them maybe, especially in the interiors, they don't really maybe have awareness about, you know, why it's important or imperative to have an insurance cover. What is likely to happen to that person during the different stages of life without surviving any kind of insurance product?
Okay, you know, insurance is about transfer of risk, where you try to protect the uncertainties that come with life. And I've been going to my village most of the times, most of the weekends. And one of the things that I've realized is they have their own local arrangement of an insurance, whereby they have, like let's say, we have a burial. They have like a law whereby every household is going to contribute 100 shillings, so that when they have such an issue, then they are able to protect, or they are going to bring their resources together and solve that issue. But now, just imagine if you are in a neighborhood whereby people do not have that kind of a program. What is going to happen? You are going to start forming WhatsApp group. You are going to start borrowing money. You are going to start selling your asset. You see, but that problem can be solved if you have insurance. So I'm going to say that most people that are not aware of how insurance works, life is life. You might be lucky, yes, you can be lucky, because I was talking to another person and he told me, I was trying to explain medical insurance to them, and they told me since they were born, they have never been admitted to a hospital. You see, and I told him, you know,
so
what?
they don't need an insurance.
Yeah, they don't.
Insurance cover,
But I told him,
it justifies the reason.
yeah. I told him nobody in a hospital
Right.
prays to be bedridden. It's something that just happened out of nowhere. So are you going to wait until that happens? And that's why sometimes we and the people have a problem, because they think we sell bad luck. But that is not bad luck. It's something that happens.
Right.
So I would not want the viewers and the audience to come suffering later in life, because they had a chance to transfer risk that is associated with life, but they failed. So I would want start a little, because if people think that insurance is expensive, but with 250 shillings, you have an insurance cover that can cover you up to 100,000 in case of an accident. So just imagine 250 vis-a-vis what? 100,000. So you can't say that it's not really affordable, because it's not 250 per day, it's 250 shillings per year. So I would want to tell people that from the mama mbogas, because we say is the border people, and every Gen Z, you have the chance to have insurance. Yes.
You had tried to paint a picture of the emergency. Is it the emergency cover?
Yes.
But I think in our Kenyan consumption of insurance, at least you're likely to find somebody with a health insurance cover, right?
Yes.
Maybe what makes it difficult now that the statistics says it's 3% in terms of penetration. What makes it difficult for people to go for these other types of insurance, where you can even insure your mobile phone, you can insure your tech gadgets, etc.
Okay.
Why do they go for the health cover?
Yes.
Maybe from an insurance mindset.
Okay, from an insurance mindset, if there is one thing that can eat all your savings, is your health. Because as I was listening to Maina, and he was saying that you might be having problems of 100 shillings, 100,000, but you might also be having issues with people, and you might also you might not be peaceful. But there's one thing that is going to affect all your life, is when you have issues with your health. That becomes the primary problem that you have. So people tend to protect the medical part because it's expensive. Because you might, if I know most of the audience here have been in a hospital setup, and you have come to realize that when you go there nowadays, actually, medical bills are very expensive. You go to a hospital, they tell you before we admit you, 500,000. How many people in the Kenyan environment are able to raise 500,000 like that easily? Yeah. But with a premium of around, let's say for the 40 years and below, with a premium of around 17,000, you have a cover of 1 million. So yeah, that's why you see now, at least with 17,000, you have a cover of 1 million. So why that's why people prefer to go for the medical way, because of the uncertainties. The reason people don't insure their phones, one, I tend to think that people are not aware that they can insure their assets. Because let's say, unajua watu wanapigwa ngeta sana actually, yeah, and the goons coming up. It is the right time for us young people and also everyone watching to understand that you can protect as little as you have, because the policies are there to protect you.
Right.
Yes.
And I'll come back to you later on to talk about, maybe you can take us to the process of how claims are usually done or facilitated, and why Kenyans are skeptical. I think there's that issue for trust deficit. But let me come on to you, Nancy.
Sure.
Is there a way, in terms of financial literacy, young people can be trained to ensure that they look at their future more, so that they secure, you called it a what? A wealth what? Is it a wealth trust fund? I think there's a word you used earlier. So maybe what are the
generational wealth?
Right, yeah. What are the main financial literacy skills that could go there, in terms of also if you are to incorporate insurance, so that you know, it stays safer?
Okay, that's good. I think it all takes initiative, to be honest. And the reason I'll say this is because when it comes to protection, it has to come from love. It's not your money to put in your pocket, but it's asking yourself, if anything was to happen to me tomorrow, what would the people who depend on me, you know, live on? How would it be? If it's kids in school, how would they be seen through their education? If it's that parent of yours, if it's that spouse of yours, it's a protection question, and it's a question that comes from love. Asking yourself, how can I do this? So for instance, in my case, I have a daughter, and I ask myself, if something was to happen to me today, she's young, she's not even 10 years, how would she continue with her life? And that sent me straight to researching about life insurance, and that actually makes my story, because I was in corporate before I pivoted to financial advisory. And because I found so much information that I feel Kenyans need to know, I decided to, you know, pivot so that I can educate. So to answer your question, it starts with curiosity. You know, you have to be a forward thinker. Ask yourself such questions. No one will come to ask them for you. So once you get curious, then you find financial advisors like us that will guide you to protect your family, protect your income, and make sure that you're getting such policies that are forward thinking, that are building wealth and protecting. Okay. Right. I hope I've answered it, but that is the best way I can answer that question.
Let's imagine maybe the worst happens. The two partners who are together. Even Gen Zs, even though they say they're not all about marriage. Let's say they served together, and then the worst happens, the other one pulls out. How will you solve that case in terms of it's distributed equally, so that each and every one of them goes satisfied?
Okay, so when it comes to insurance, insurance is a contract between the company and the individual, or, you know, in this case now, the individual that is being protected. There's something we call the terms and conditions. Insurance, because it's a contract, there's a terms and conditions that usually apply before you even sign up for a policy. So unless you're taking a policy that will cover both of you as a joint cover, which again goes down to, you know, goes back to the terms and conditions. If I've taken a policy for myself, it covers me or it covers you. But unless it's a joint policy, it cannot be distributed equally. But then if it's a joint policy, at the point of signing the policy or signing up, you can say, you can agree that the benefits will be 50-50. That's something you do at the point of signing up. So if it's 50-50, then that is exactly how this will be paid out.
Yeah, I don't know if it's Antony that should answer this or Nancy. In terms of delving into the virtual world or the virtual space, if a Gen Z has digital assets, how can they ensure them before we get to how a claim is processed?
Okay, I'm going to give, when you talk about the virtual assets, you know, as Gen Zs, I don't know whether I'm a Gen Z, but as Gen Zs, as Gen Zs, we have a way of trying to hide our asset. That is, trying to hide it, maybe away from the government. And when we are creating policies with the insurance companies, we try to protect things that are legal. I don't want to say that cryptos are not legal, but it's something that is in the limelight. Yeah. So because the crypto is not well elaborated through by the Kenyan insurance, but on the part that we can try to protect is the cyber part. We have an insurance, we have that, we call it cyber insurance, that protects you against hackers and against viruses that can make you lose your maybe most important files and things that you have saved in your computers.
Right. Let's imagine the worst has happened now. This person is going to now start following up on, it's called a claim?
Yes, claim.
Yes. So maybe take us through the process. How is it done, and why is it the skepticism, especially when Kenyans should, you know, be getting some of these policies? Why do they think twice and then later on ignore? Now that it's 3%, that's a very low uptake.
Yeah, it's a very low uptake. When we talk about claims, we have, every insurance has different process of a claim. I'm going to start, because you have talked about how you can insure a phone, I'm going to use that one as an example. When your phone is stolen, the first thing that you do is you have to report to the police station. You're going to be given the abstract, and then you're going to come to me, who is your agent, and I'm going to give you a claim form. We are going to attach the claim form and the abstract, and I'm going to take it to the insurance company, and I'm going to file your claim. After that, the insurance is going to sit down. They are going to assess your claim, how true is your claim, and then they are going to, if there is nothing that is worth investigations, then they are going to pay. So that one is on the issues of on the domestic, or let's say when it comes to issues of a phone. Then we have another one, like let's say motor vehicle. The same case. You need to go to a police station. You need to get an abstract. Then you take you fill claim forms. You take them to the insurance company. They are going to assess the damage. They are going to tell you that this is the amount of damage that you are going what you are going to do. We have a total loss. They might tell you that you are going to pay this car fully, or they are going to give you an option of we are going to repair your car. So claims are different depending on the type of covers that you have. Right. But one thing that I want to assure Kenyans watching, that the factor that determines that your claim is going to be paid depends on who your agent is.
Absolutely. Yes. All right, I think we can hold on to that part as we take a very short break, but we are asking you, would you rather save your money or pay for insurance, and why? Would you rather save your money and pay for insurance, and why? Talk to us on the hashtag, which is Pawn Talk TV show at Y254 channel. Personally, mine is at Brian Sakwa 101, not Brian Sakwa. Brian Sakwa 101. Yeah, that's my handle. And when we come back as well, Nancy will be telling us what are the main core skills that you need as a young person to ensure that you secure a wealth trust fund. I think you need that too. So let's take a break, and when we come back, we'll be picking and sampling part of your feedback in just a bit.
Y254. Imagine.
Ni kila Ijumaa kutokea saa 1:30 mpaka saa 4 kamili. Inakuwa ni burudani kiukamilifu ya Afrika Mashariki.
Tunakupatia umbea kwa segment inaitwa The Big Story. Tunachanua what's happening in social media. Msanii amefanya nini na nani.
Kando na mziki mzuri wa Afrika Mashariki, The Big Story Pia nawaletea mastaa tofauti ndani ya studio kutoka Kenya, Uganda, Tanzania, Rwanda, Burundi, yani ukanda mzima wa Afrika Mashariki.
Nakumbuka pia unaweza interact na sisi kwenye mitandao, yani social media platforms, that is Facebook, Instagram, X na hashtag ni ile tu, #YMashariki Live.
Tunakupa mix kali kutoka kwa DJ Kuch, muziki ya kizazi kipya iliyotamba inazidi kutamba na ambayo tunaitambariza zaidi.
Exactly, and as always msisahau lazima tuwapatie burudani yenye vitamin extra.
The wait is over. KBC iko Huduma Center. Starting with Nairobi, kupata huduma za KBC imekuwa rahisi. From digital guidance and signet services to booking of commercial adverts and documentaries. Visit our dedicated desks at Huduma Center GPO, Times Square, Makadara, Kibera or Eastleigh. Tunakungoja hapo. Whether it's a casual announcement or a specialized media solution for your business, we are here to serve you. KBC at Huduma Centers, moving closer to you. Your station, your service.
Y254. Imagine.
All right, absolutely. Thank you for staying with us and welcome back. You're still watching Power Talk Show. My good name is Brian Sakwa. Before we went on a break, we had asked you, would you rather save your own money or pay for insurance, and why? Would you rather save your own money or pay for insurance, and why? And there's feedback coming through. Mbogo Macarius amesema Runyenjes in. Shout out to you, Mbogo, from Runyenjes. Yvonne Raymond anasema, if you only save one hospital bill can finish 2 years of savings. If you only do insurance, you still need cash for daily life and small problems. Insurance won't cover. As for me, I guess I will do both saving and insurance. Huh? Is that a good strategy?
That's
too?
an excellent response.
Yeah. What do you think of it as well, Antony?
I also support.
Okay.
Yeah.
Next, I think this is the last slide. Barry John amesema, alone I'm good, nitakunywa miti shamba, but for the case of my family, insurance is a better option. Presley Bryden amesema Naivasha, Karagia following. Thank you so much, Presley Bryden and Barry John, for that. You can see there's some skepticism too when it comes to even people going for the insurance covers or the covers here. So maybe what makes Kenyans skeptical about going for it? Is it because maybe they think it's going to waste their resources? The process as well of getting their claims processed doesn't have a sort of like assurance, and thus there's a trust deficit to that?
Okay, one of the challenge that I have realized when I'm on the field and trying to talk with Kenyans, I think our predecessors failed us. Because we have seen a history of many insurance companies falling. And when a client tells you that, are you going to take me to this insurance that is not performing? So people have the fear because of the recent history that we have with the insurance companies and also agents. So I feel that we as Kenyans, our Kenyans need to unlearn about insurance and also do learn and also relearn, because that's the only way that we are going to have every Kenyan, or we are going to take the percentage up.
Yeah.
Yes.
But I believe also part of what contributes for trust deficit is because watu wengi wameoshwa.
Wacha nikuambie.
Yes, they took
watu wengi wameoshwa. I'm going to talk more now locally.
So the integrity aspect of for a legit
yes,
insurance
because
company.
They tell us that tukiuza insurance, we are well dressed, our voices are very low, we are like begging. But when it comes to a claim, because I'll start, let me cut and also introduce. Our work is based on commission. And when I am able to convert you to give me business, when I eat your commission, then most agents tend to forget the client. And when a claim comes, which involves a lot of time and movement, most agents run away from that. And that's why we are having these trust issues, because many people have suffered because of that. Whereby you have a claim, you already paid, let's say you paid like 50,000, and then you have like a claim, but now the agent is nowhere to be seen. And the insurance, you as a consumer, you don't know where even the insurance company is.
Yeah.
So that is one of the reasons that most of the Kenyans are a bit skeptical about insurance.
Yeah.
Yes.
Because you're just walking in town in the street and somebody approaches you and akwambia, mimi sasa ni wa insurance, so and so, and I'm selling you this and this. But they're very striking and convincing in terms of them getting you hooked and
Yes.
look, yeah. So I think maybe that contributes to the trust deficit story. Like how do you determine if an insurance company is legit or not? Maybe you can also sound off. Is there a way you can filter through and see if this insurance company selling these policies is legit or not?
Okay.
Must you physically visit their offices?
For that part, whereby we are checking about genuineness, as agents, me and Nancy and other agents out there, we are regulated by IRA, and we are given a license that is renewed every year, and we also have license numbers, whereby you can be able to check whether I'm genuine or not genuine. For the insurance companies, we also have, at least now we thank the government and the many improvements in technology, that you can be able to check through AI, you can check through Google and other social stuffs, and you can be able to check. If I'm going to tell you I'm Antony and I'm selling on behalf of this and this company, you can be able to go through your phone, immediately check, do this company exist? Then the companies, most of the companies in Kenya actually, if I'm not wrong, they have websites. So you can be able to find the information there, and you can be able to see whether the product I'm selling to you or I'm convincing you to buy exists in their platform.
Right.
So it's easy, and at least if you don't trust me, you can ask me about my license, and I can share proof, and then there is a way of verifying whether the license is valid or not.
Yeah, but
so
do Kenyans really even go through that patient, especially on the street?
Well,
a random person just said, "Hi Nancy, I'm selling this. It's for a car. It's only 500 bob." Yeah.
Yeah, actually,
do you have the patience and the time of going through the credentials, verifying?
Yeah, I'd also, you know, I think it's very important, and it's very important for us as the consumers of insurance to also start getting involved in the process. Don't just sign anything that you've not verified, you've not gone through it, you've not looked through the terms and conditions. You just want to sign so you can activate your policy. So the angle that I want, you know, for us to look at this through is, or, you know, it's how about the consumer? What is your responsibility in this? First of all, the consumer has the responsibility of verifying the information, going through the terms and conditions and making sure they're signing for something they know exactly what it is. Number two, disclosure. And this is huge for the Kenyan market.
Yeah.
If you're taking a policy, and you're lying about, say, your medical condition, you're lying about maybe your smoking status, you're lying about those things. Now, I'm talking in terms of life assurance. This is really dangerous, because at the point where the insurer gets to know that you lied, you did not disclose about maybe a pre-existing condition or your smoking status and stuff like that, it's unfortunate. The insurance company will not pay. And that is where it's important for you as the consumer to also be open and be honest and disclose such things at the point of signing up for your policy.
Right. So there are things to follow up before you sign up. I think he had tried to paint a picture a little bit there. What should you look at? I believe are they the adherences in terms of this is what I'm required to read and understand before now I accept this policy? Yeah. Specifically what aspects?
So I think first of all, you need to understand the product. There are people who will, I've seen people online saying, I've been saving this amount for this number of years, and you know, I was told I would receive this, or I failed to pay for 6 months because I don't know, COVID happened, or my business went south. There are the provided terms and conditions for you to understand what it means, what you need to do you know, even the meaning of things like surrender value, you know.
Or surrender value.
Surrender value. You need to understand these things are not as complicated as people think. Yeah. So you need to understand what does the terms and what does the terms and conditions say about me defaulting the premiums for 6 months.
Yeah.
You need to understand, because it's right there. So as much as us financial advisors or agents will take you through the product, you also have the responsibility to just sit down with that piece of paper, go through it yourself, understand and ask questions.
Yeah.
Yeah.
Right.
Also make sure that you are with an advisor who's reliable, someone who will educate you through it. But now the good thing is nowadays people have ceased from being insurance agents to financial advisors, because we are disseminating the information, not just so that you can buy so that I can get some commission, but I want to also make sure that you understand the product and what you're getting yourself into. And another thing, people like us that are independent, I'm an independent, he's an independent, are the people to go to. And the reason is because we have objectivity and no bias. Before I propose a product to my client, I'll have combed the market to ensure that it's the best product there is in the market. And even the company that I'm recommending, buy from this, I've vetted them, I've looked at their customer service, their claims processing and all that.
Right.
Yes.
Can you tell if it's a fake policy and a real policy? Is that way to tell? Even when it's being sold to you virtually?
I think it's important, like he said, to go to the actual company website when you're buying something virtually. And sometimes also we avoid verification. It's really easy now with AI to just get the actual customer service number that you can dial and say, hey, my name is Nancy. I've tried buying a last expense cover on your website. These are the policy details. Could you please verify for me? It's simple. Muongeleshe hata na Kiswahili. It's very simple.
Yeah.
Yes.
I think you are to explain about wealth and trust funds.
Yes.
Is there a way insurance can be incorporated to that, and how can young people tap into it? And how is that process? I think you had also mentioned, is it the Rockefeller family? And how for years they continue to multiply their wealth?
Absolutely. All right. So this is how it works. Nowadays, as a legacy planning consultant, this is how I advise my clients. You've set aside 100 shillings per day. It has grown to 3,000 shillings per month. You've gotten a policy worth 3,000 bob. As a 25-year-old, and I'm giving actual numbers, you've locked a sum assured of 5.6 million shillings. Okay?
Yeah.
Now, you want to ensure that when you're not around, this money, once it's paid by the insurance company that you've bought the policy from, this money is used exactly as you wanted. Take an example of, if I took a life cover and I signed someone to be the beneficiary, because my daughter is not 18 yet, she cannot receive the money in case I transition before she turns 18. This person takes the money in their pocket and spends it as they want. This is where a trust fund comes in. So we have insurance companies that provide these services where you can set up a trust fund, a living trust fund, and assign it as the 100% beneficiary for the whole life cover. What happens is that the trust fund gives you an opportunity to write instructions on how you would like this money to be spent when you're not around. It could be school fees, it could be upkeep, it could be medical expenses, it could be anything that you put in the instructions. And what happens is that the insurance company will pay this money as per your instructions when you're gone. And as long as you're alive, you can always go back and change those instructions. And the other myth I want to remove about trusts is that trusts are expensive to set up. In fact, trusts will cost you 0 shillings to set up such a cash trust fund. It can hold cash savings, proceedings for your whole life cover, proceedings for your endowment or savings plan. It can hold your retirement plan, your retirement proceedings. It puts them together and administrates in the exact way that you've instructed to make sure that this money is preserved across generations. And guess what? It earns an interest every single year of between 8 and 12% of the money within the trust. So you're literally paying nothing for it, because you're paying, say, what, 1% of whatever is held within the trust.
Yeah.
But you're earning between 8 and 12% of whatever is held within the trust. So you're literally not even touching the principal.
Yeah.
Yes.
And how does the insurance then play in terms of now shielding yourself from fraud or being, you know, let's say being ripped off? Yeah. Is that, I don't know if you, Antony, you can sound off on the same too.
Okay.
Yeah. How does insurance shield somebody's wealth from being laundered or from fraud?
Well, I'll start by saying insurance is a business like any other business. They are focused on profit and reputation. So if I have a company, an insurance company I've created for, let's say, 50 years, how do I protect that? The first thing that I start with is to protect you as my client. I have to make sure that I protect you, because a bad name can destroy 50 years of working. So I want to tell Kenyans that in insurance, unless, because the bad part about everything is that we have had insurance companies fall. We have seen them closing, and we have also seen the regulatory body closing some insurance companies. So I would tell Kenyans, if you want to invest your money in a company, first you need to understand how strong is the company, how is it able to withhold tides in the market. Because yes, I can start an insurance company today because I've met the threshold to open a company, but do I have the capacity to pay claims continuously for 10 years or for 5 years? So as far as insurance is safe, then you as a consumer have one responsibility to make sure that you take your money, or you use us as financial advisors to tell you or to take you to companies that we believe and trust that they have longevity in the market.
Yeah.
True.
Yes.
I think this is from an industry insider perspective. How is the in the insurance industry balancing compliance with innovation? And I think we had touched a little bit on how AI, I think she had mentioned how you can use AI to research. So how is it revolutionizing service?
Well, because of now we are becoming more digital, and most Kenyans have smartphones, insurance is trying to penetrate to them through websites, through social media pages, through talks like this ones, trying to tell and educate people about how you can access insurance services, how you get paid when you have claims, what and what can be insured and what cannot be insured, how our company has been built. So the insurance companies are really trying hard to make sure that Kenyans are educated and they understand a small aspect, and also to clean a name that had been tarnished before. So that is one part. I also think that having us as financial advisors, stroke as they know us, most of them call us maybe brokers, others agents, we are also trying to make sure that we educate Kenyans on insurance products and how insurance can help solve a lot of problems.
Yeah.
Yes.
In terms of policy rights and regulations, maybe, what can be adjusted to ensure that it enhances transparency?
We have a body, a regulatory body, just like the bodies like Kihara. We also have an, as I had mentioned earlier, we have an insurance regulatory authority, IRA, that ensures that it includes you as a consumer, me and Nancy as agents or financial advisors. They also incorporate brokers. They incorporate insurance companies. They are the regulators, how we sell, what we sell, and the benefit it has to a local mwananchi. So that body ensures that you cannot just come up with a product and sell it to the people without its approval. And that's why we have had cases where companies close. The IRA ensures that they try and refund premiums or ensure that the consumer is compensated.
Yeah.
Yes.
Maybe Nancy, what are, in your service and in what you do in your professional capacity, what are some of the main areas you've noted where Kenyans maybe don't take it seriously, or young people, apart from the here and now, YOLO mentality, and also maybe who are the people that flock to you as well for products that you serve them in terms of futuristic wealth and ensuring that everything is safe for the future?
So your question is,
what are some of the lacking areas that you've noticed in your, let me not say your clients, in Kenyans in general, and those that come to you for service? What mainly do they consume and what do you give them?
All right, so what I've noticed is there is a very big gap of financial education with regards to insurance. There's a lot of confusion of products. There's a lack of appreciation on how to leverage these products for wealth building, for protection, etc. So it's very important for people to get educated. And that is why some of us, in what we share, it's mostly educative. So I'd like to speak to the viewers today and niwahimize. It's upon you to take time to understand. For instance, I was checking today with a client of mine, and they wanted to get a last expense cover for their parent who's about 63 years, okay? Yeah. I was checking the market for them, what they would pay annually to make sure that, you know, when their parent transitions, they will be paid $500,000 to take care of the funeral expenses and all that. And I was just realizing that we do have such a product for less than 10,000 shillings, 8,000 shillings per year, not per month, to make sure that you're protected, so that when that parent transitions, you can be paid this money to make sure that, you know, these things are taken care of. Because we're in 2026, yeah? It's no longer back then when we used to assume life will happen. The community watachanga. We want to educate ourselves, leverage on these things. Some of them are super, super affordable. It's all about planning. It's all about understanding what is there in the market and taking your time to really learn. Yeah,
absolutely. This is my last question. Then you guys can tell where they can get to plug you on socials. Maybe are there trends as well in the insurance landscape in terms of how Kenyans are consuming insurance policies or covers?
Okay.
Especially in the digital world today.
Okay. As I had said, the research that I mentioned about the penetration of 3%, then that one is a data that can be able to guide you on whether the Kenyans are taking up insurance. And insurance is more of when I tell you I'm selling medical insurance to you, what am I selling to you? I'm selling a bad thing, in quotes, that you are going to get sick in future.
Yeah, foreshadowing death.
Yeah, foreshadowing. Bad luck. When I tell you that you need to insure your phone, you are going to think that I'm praying that your phone can be stolen. But it's time, as Kenyans, we understand that insurance is here to make things easy for us. Just imagine when we have been having the goons and the destructions of property. Most people lost business worth millions of money. And just imagine you have set up a company for 10 years, we have built and you have equipped your supermarket and everything. And one day you find that goons have entered your shop, stolen everything. And I was there 2 weeks ago in your shop trying to tell you that, you know what, we can insure your shop, we can protect you, and in case this and this happen, then we can be able to compensate you your millions. So if Kenyans would try and see that anything that can happen to your neighbor can happen to you, then they are going to take up insurance as something that is coming to solve most of their problems.
Right, absolutely. There's so much to talk about, but we have run out of time. So if they want to be in touch with any of you for more information and details, please plug in socials.
Okay, so before I mention my socials, I want to give a quick parting shot.
Yes, please.
I want to tell Kenyans that you can build a multi-million estate for your loved ones starting from as low as 3,000 shillings per month. And you can structure it through a living trust fund that costs you nothing to make sure that your dependents are protected and that you build generational wealth for them. So where you can find me, I'm on all social media pages, Nancy Kiende, Financial Advisor.
Absolutely.
Thank you,
Antony.
Mr. Brian. For me, I'm going to tell Kenyans that anything that you feel has value, then you need to protect it. And the person who is capable of guiding you through the whole process is me, Antony Kihara. I go by the name Mr. Insurance Kenya in all the socials.
Right, absolutely. Nancy Kiende, inheritance legacy planning consultant. She's also a financial advisor alongside Antony Kihara, insurance consultant, as well as a financial advisor too, right?
Yeah.
So both of you share this, and she tried to say, you know, we are now moving from being insurance advisors to financial advisors.
Yes.
They go hand in hand. Thank you so much for sharing your invaluable insights, right?
Thank you for having us.
All right, you're welcome. Thank you so much to you too as well for watching us for this conversation. You'll find it on YouTube at Y254 channel, but continue engaging with us on our question of the day at Power Talk TV show at Brian Sakwa at Y254 channel. See you next time right here on Power Talk.